Hey everyone, and welcome back to Explain the Charts. Today is March 27th, 2025, and we're taking a close look at the S&P 500, ticker symbol SPY. We're going to analyze recent news and events impacting the market, then dive into the charts to see how those events are playing out. Let's start with the news. Recent headlines point to some volatility. President Trump is escalating trade war fears with potential auto tariffs, and Barclays has cut its S&P 500 target, citing tariff pressures. Tech stocks, including Nvidia and Tesla, have also seen significant drops, further impacting the market. Now, let's shift our focus to the SPY daily chart. Looking at the recent candles, we can see some choppiness, reflecting the uncertainty mentioned in the news. There appears to be a recent consolidation pattern forming, suggesting a potential period of sideways trading. Zooming in on the last few weeks, we can see a pronounced downtrend followed by a slight recovery, but that recovery faced rejection on March 26th. This could be correlated to Trump's auto tariff announcements, which hit the market yesterday. The 560 level appears to be acting as a significant support level. Let's see if it holds. However, if it fails, we could see further downside towards the 550 level. Now, let's switch to the 1-hour chart for a more granular view of recent price action. The hourly chart shows a clearer picture of the intraday volatility. We can observe a potential head and shoulders pattern forming, with the neckline around the 567 level. A break below this neckline could signal a further bearish move, particularly if confirmed by strong volume. Conversely, a sustained move above 570 might suggest a short-term bullish reversal. This also roughly correlates with the BMO's Brian Belsky's prediction. Remember, Brian Belsky details the path to $6,700 for the S&P 500 on CNBC. Finally, let's move to the 15-minute chart to refine our entry and exit points. On this time frame, we can see short-term support and resistance levels more clearly. Currently, the price seems to be consolidating around the 575 level. A break above 576 could present a short-term long opportunity, while a drop below 574 could offer a shorting opportunity. Remember to always use stop-loss orders to manage risk. Keep an eye on the volume confirmation for any breakouts. If the price drops below 570, it's very likely it will test 560. If the price rises above 580, it's likely it will test 590. Anything beyond that is not very likely given the tariff news from today. To recap, key price levels to watch are 560 as a major support, 570 as a potential pivot, and 576 as resistance on the shorter timeframes. Keep an eye on news related to Trump's tariffs and any statements from the Federal Reserve, as these will likely be the primary catalysts for market movement. A break below 560 on the daily chart would signal a bearish continuation, while a sustained move above 580 could indicate a bullish reversal, albeit less likely in the short term due to tariff concerns. Remember to always do your own research and manage your risk appropriately. Thanks for tuning in to Explain the Charts. Don't forget to like and subscribe for more in-depth analysis.